There are different reasons why the markets are currently hardening as they do. There's always a combination of factors that come to play. So first of all, I think we need to recognize that we come out of a very long soft cycle, which has lasted for years and years, in which rates just kept eroding. And I think that's how we went into the 2017 Nat Cat season, which was, of course, extraordinarily heavy with the 3 hurricanes and a few other things that happened. Also, 2018, from a Nat Cat perspective, was quite significant. And then on top of that, you had a number of other factors playing a role. Man-made losses that were large, some claims inflation that played a role. And then when we entered 2020, of course, you got COVID on top of everything else. So I think that makes for a very interesting mix, if you will, and makes for a very important cocktail to slow down supply. And therefore availability of capacity and the price levels that go with it. I think what further determines the situation is the fact that the interest rates are incredibly low. So insurers have no other choice than to try and make their margins on the underwriting side and not so much on the investment side. And again, that plays a role as well. So all of these factors taken together is what you see happening now. And this is the reason why the market rates or the markets are hardening the way that they do. Now, to the question, how long will this last? I don't have a crystal ball, unfortunately, but it's clear, in my mind at least, that the low interest rates are not going to go away anytime soon. So I would expect the hard cycle to continue at least into 2021. And what we will see after that is hard for me to predict. On a standalone basis for the insurance market as such, unfortunately, the answer to that question has to be no. I think pandemic risk is inherently a global risk. It is a risk that you cannot diversify. And once it happens everywhere, and therefore it is accumulating per se. And that makes it very difficult, if not impossible, for the private insurance market to cover that kind of risk, because there won't be enough capital in the world really to carry it. So what we see as the solution to this problem is a public-private partnership. I think governments will need to provide the capacity, and the insurance industry can bring to the table the necessary skills and capabilities to model the risk, to price the risk, and with that to provide the transparency of the cost of these risks to society. And obviously also deal with the administrative part, the policy issuing, the claims handling, et cetera, et cetera. So that's how we see a potential solution. Different conversations are happening already in various different countries, amongst others in the UK and other countries as well. So I believe that this will take time. It's not something that will happen very, very quickly. It's very complicated for many different reasons, but I think that's where we need to look for the solution. Yeah, first of all, by avoiding any kind of last-minute surprises. I think that's in all of our interests in this particularly complicated marketplace that we're trading in. So you can count on us to be transparent in terms of our risk appetite, in terms of our underwriting needs, and in terms of our pricing and terms and condition needs. And let's make sure that we do this early on and that we avoid any last-minute surprises from that perspective. Within Swiss Re Corporate Solutions, we've done our homework, and our risk appetite is clear, our strategy is clear, we're open for business. And as long as we can be very transparent with each other about where we can play and where not, we're happy to support wherever we can. Furthermore, we're always happy to have discussions with our broking partners and with customers around innovative, bespoke, tailored solutions to address very specific customer needs, be that around parametric solutions or captive reinsurance or fronting solutions or anything else for that matter that requires a specific approach. We're happy to have this discussion. And again, let's have that discussion early because typically that takes a little bit of time. We're ready to work with our broking partners and with our customers. Yeah, two things really come to mind. First of all, it is our international business capabilities, which we've brought to the market, which I think are a very compelling and efficient proposition for international business placements, which we're looking to expand in. Secondly, and especially against the background of this complicated trading environment, we know that a lot of customers are looking to optimize their risk retentions. Now, for those customers who have captives, obviously that's something that we can work with them on. But also for customers who don't currently own captives, we have developed an approach called the virtual captive, which really emulates all the behaviors of a captive, and as such is a very efficient structure to help customers efficiently and effectively manage their retention in a better way. And that is something that finds a lot of interest, understandably so, in the current market circumstances. So we're very eager to work with our broking partners to bring that product to the market.